all good things eventually come to an end. And that does not exclude the free money, $10 billion government slush fund that was given to the states to then dole out to homeowners all over the United States. That slush fund is almost depleted. It's almost over. Well, it's kind of almost over. We're going to talk about what you can do if you applied for HAF, if you're still waiting for the money, or if you failed to apply for HAF and you are now looking at a forbearance bill that you can't pay. We're going to talk about that in about 10 seconds. So the HAF money, which is the Homeowners Assistance Fund, which is a $10 billion slush fund that was given by the Biden administration to all 50 states and all the territories in the United States to dole out money to people who, for whatever reason, could not pay back the forbearance amounts and other amounts of money that they owe because of the coronavirus. Now, that money was supposed to last 2 years. However, it's only lasted, it looks like 10 or 11 months. Most of that money started to be dispersed in January of 2022. We are in October of 2022, and a lot of that money is being spent. So there's a lot of states that have frozen the disbursement because the money basically is being spent a lot faster than they thought. So you are probably okay if you have already been accepted for HAF and you're just waiting for disbursement. Those people, pretty much, you're gonna get your money. You're also pretty much okay if you've been approved and you're just sitting there and you're accepting the paperwork, you're submitting the paperwork, whatever the request, and you're just waiting for that final approval. I would say that you're probably okay. In Florida, what they're saying is that they're not taking any new applications because it would be unfair to take new applications if they know that they're going to spend the money that they already have allocated. What that means is that you basically, if you submit a new application, the people in Florida and a lot of other states are taking the same position, that they know how much money they're going to give, and they don't want to take new applications because the new applications would mean that people aren't going to get paid. So what do you do if you've been denied, you applied late, or there's a new hardship? These are the people that unfortunately are probably not going to get any HAF money. Now remember, there's a lot of people that applied for HAF that were supposed to get HAF but might not get it. So it's possible that these states will open up the HAF money for new applicants. So I would not despair completely. You never know. This is a wild and crazy time, and a lot of things might change. However, let's assume that that doesn't happen. So you've been denied for HAF and you are basically in a panic. The first rule, and you've seen me say this in other episodes of Motivational Esquire, do not panic. You have options. It is not the end of the world. It is not over until it's over. First thing you have to do is take a breath. If you are sitting there and you've been denied for HAF and you don't know what to do, first thing you have to do is take a breath, because that is the only way that you're going to be able to do the next things that you need to do in order to save your home or save your equity. So the first decision that you have to make when you're deciding if what you're going to do after you've been denied for HAF, or that you're looking at a forbearance bill that you cannot pay, is, do you want the home or do you want the equity? These are basically not mutually, or they are mutually exclusive in my opinion. You can't, in most cases, have both. It is very possible that you can keep your home through the different tactics that I've talked about in several episodes of Motivational Esquire. However, you're probably going to lose your equity. Actually, you will lose your equity if you do that. And if you're more interested in the equity in the home than keeping the home, what that means is that you don't care about this particular property where you live, but you like that equity cushion, Then we're going to talk about what you can do in that situation. First, if what you're looking for is to keep the home, meaning that you love your home, this is your family's home, this is where you want to stay, your first option is a loan modification. I've talked about loan modification on several of my episodes of Motivational Esquire. You can go back and look at them. But specifically, what you're asking the bank to do is to modify the loan. In essence, drag out, reissue a loan from whatever term that you're in to a 30 or 40 year mortgage. Basically, you get a new mortgage. What they do is they take all the money that you owe, meaning all the payments that you owe, and turn it into, add it to what you owed at the time that you stopped paying, and then turn it into a new loan. So a lot of people are surprised to know that when that happens, all their equity or a lot of their equity is gone, because all these late payments that you haven't made, they are allowed to add all that interest, all the late fees, and all of the principal payments and all the escrow payments that they made on your behalf into a new loan. So let's say you had a $2,000 a month mortgage payment and you did not make 12 payments. That's $24,000. That $24,000 is added to whatever you owed at the time that you stopped paying. So if you owed $100,000, after a year, you now owe $124,000. That's how loan modifications work. So a lot of people are surprised by that. The other thing that you could try to do is you can do a forbearance repayment. What that is that, let's say in my example there, where you owe $2,000 a month, then they tell you, okay, you owe $24,000, we'll give you a year to pay that. So you would basically make a double payment every month until the year is gone. Some people can do that. Some people have savings. Some people have the way to do that. That would save your home because it'll put you back into the good graces of the bank and make you current. This is not available. This is not like a menu in a restaurant where you say, I want the loan modification, I want this, I want that. No. Other than fully paying, meaning writing a check for the full amount of the forbearance amount, there is no selection. These are options that the bank could possibly give you. There is no guarantee of any of these things actually working. The last thing I have here is a Chapter 13 bankruptcy, which means that you get the opportunity in my example of the $24,000 to spread that over 36 or 60 months. A lot of people, this is the last option, and you can do that if you have no other options. Now, let's say that you made decisions that you don't really care about this property, you just want the equity. Now, I'm going to state the obvious, but sometimes the obvious is not that obvious. In order to save your equity, you're going to have to sell the house, grab the equity, either buy another house. If the prices are too high, you rent and wait out the market. This is the only way that you're going to 100% save the equity in your house without making large payments or coming up with all of the money that you need in order to save the home. You may be in a situation, what we talked about was the forbearance repayment. If the bank gives you that option, that might be a good option because this also would save your equity. You are not asking for anything in the situation other than, in essence, a zero interest loan that you're paying back very fast. Some people can do that, and that might be you. Now, there's a secret, and I had it in the other one, but I'm going to tell you right now, all loan modifications eat equity, all of them. You're getting nothing for free with a loan modification. What you're getting is an opportunity to pay back what you owe over more time. You're adding interest on top of the interest that you owe. Now, I'm not saying it's a bad thing because you are saving the property. However, this show is about understanding what you're doing and understanding your options. Loan modifications are not financial tools that basically make you money. All loan modification does is save your home. I'm not saying it's a bad thing. I'm just saying understand what it is. So those are your options. HAF money is running out. If you were late in applying, well, in many cases, that's it. It's over. If you are in the queue waiting for the money, I would say you're probably okay because the states aren't just turning off the money. what they're doing is they're saying, okay, we know that we have 10,000 homeowners waiting for the money that's left. We are going to not accept new applications because it wouldn't be fair for those other ones. Doesn't mean all 10,000 people are going to get that money, but they're assuming that most, if not all, will, so they're not taking new applications. That's what's going on right now in the first couple weeks of October 2022. I'll keep updating the HAF status until the money is gone. And you never know, we might get another injection of money depending on what happens with the economy. But for now, that's it. Have a great day. And remember, don't panic. It's just money. You have options.